Hello, dear traders. This is Alex Gerchik, and today we have a webinar on how to choose the instrument. Very important thing when you're about to begin what to trade, you have to actually, before you figure it out, the instrument that you're trying to trade, you have to understand why you're going to trade a particular instrument. For example, you decide to trade forex. Just for you to understand each market, for example, forex market or New York Stock Exchange or Nasdaq or futures or anything else that you like to trade or any country you like to trade, that is specifics. For example, if you trade forex, you have to know each instrument by heart, and you have to know pluses and minuses and a forex market. And the most important thing, you have to know what the specific of a stock market or the specific of a forex exchange. For example, if you trade forex is one specific. First of all, this is the range market. So, pretty much if you trade euro or you take British pound, most of the time it stays in range between up and down level. So very important thing for you to figure out what's the size, what is the actual moves and everything else. So the one advantage Forex has towards the others, this is the requirements. You can trade, let's say, with a 100-to-1 leverage. Obviously, sometimes it's no good if you go above the leverage, but most of the time, because the instrument doesn't move too much. For example, average instrument on Forex move a day between 0.04 to 0.05%. That's the average move in a day. If you take, for example, the stock market in the United States, you have stocks which are moving 10, 20, or sometimes 30% a day. If, for example, you want to try to trade futures also, they do trade few percent, 2-3% a day, for example, gold or oil or anything else. And plus, they have a very high leverage. Also, besides that, you have to figure out the time that you're trading. Night in the U.S. session, and then when the morning Chinese market are open, or then English market is open, England, basically, you have find out first as far as the time and the money. The beautiful part, for example, about the Forex, if that market works for you, and then figure out if you really wanted to trade that particular market. Let's say if you want to trade stocks, you definitely need much more money. Hello, hello, hello. I'm here. I'm sorry for the interruption. So, in forex market, as I said, the advantages, you can start with a very little money and with a very large leverage. This is advantage. The disadvantages, the ATR, average through range, for in percentages, um, for forex market is very low. For example, I mean between 0.4 to 0.5%. I mean sometimes you can have British pound, which can go, let's say, 0.5 to 0.7 percentage a day. So, you should understand one thing for a fact. Before you choose any single option to trade, whatever you're going to trade, futures or stock market or forex, you have to know everything about what you're about to trade. Actually, forex, does give you a lot of advantages. It's a lot of instruments. Most of the time in firm, you can trade CFDs. You can trade futures. I mean CFDs on gold, on oil, on silver, and a whole bunch of instruments, and S&P and everything else. So, in a good firm, like in our firm, Gerchik and Company, you can really have between 30 to 50 instruments to trade, which is basically plenty. If we'll start, it will start with the future market, futures. Let's say we'll take futures in the United States. You have liquid between 25 to 35 instruments: gold, silver, oil, all kind of different futures, cacao, coffee futures. You have orange futures and everything else, so on and so on. The leverage is also extremely big. For example, if you trade S&P, in some firms you can trade with $500. You can trade one S&P contract, which is about $120,000 nominal. So you can take almost 200 to 1 leverage. The beautiful part about the American futures, as far as the advantages, is you can trade them pretty much 24 hours a day, except Saturday. Some of them start working on Sunday. The only one disadvantage you have, the stops. You cannot walk away with the small stops. For example, average stop on the gold market, it's about $250 to $300 per contract, while you can trade the same contract of gold on a forex exchange with a very little amount of money, let's say with a zero point zero 0.01 of lot, and trade gold with a stop of, let's say, $3 per contract. It's a very important thing, because if you have very little money, for example, you have only $3 or $4 or $5,000, the American futures, U.S. futures, are definitely not for you. For one simple reason, it's nothing there. If you're gonna have 3 or 4 stops, you're gonna lose right away. $1,000 or $1,500, and then you pretty much have no capital to go. So you have for trading American futures, you need much more money. You probably need $25 to $50,000 to more or less sustain losses on the stop losses. And then we have U.S. market. I'm talking about right now a very popular market. So right now, very important thing, if you trade the United States market, the minuses, you have to pay for the platform. Platforms right now vary somewhere from 50 to 150 to 200. Some of them are to almost $300 a month. The commissions in U.S. market are pretty high, and you need, if you trade at the reputable firm, you need minimum to I'm sorry, you need minimum over $30,000 to trade intraday trading. If you're an investor, it's totally different. You need only $10,000 at the same firm, like interactive brokers, but you need $30,000 to trade intraday. If you don't have that much money, then you basically left with forex, where you can start trading. You can start trading very little money with a very low stops. I want to show you right now, just for you to understand what I'm talking about. So I'll show you some of the platforms. We'll start right now with US platform, and I'll show you. Okay, take a look. This is the e-signal. It shows you American stocks. And for example, just for you to understand, yesterday, this particular stock moved almost 8%. I mean, we'll take high over 35.60 and a low of 33.50. So we're talking about $2.50 and $36 is almost 8%. I want to show you something so you'll figure it out. What kind of, I have a special filter so we can see some of the stocks, which is, let's say, percentage losers. We have, take a look, we have some stocks which is down. Yesterday we had a few stocks which were down 21% at one point. I mean, stock closed at $12 and the way to $8 a share. It was down at one point almost 30%. It came back and it was only down 21%. A lot of stocks, AVP, Avon Products, take a look, were down 18%. And SBS stock, nothing big here. We have right here MOH stock minus 18%. Take a look, a big gap again. CRY, CrowLife, take a look, from 19 to $15 a share. So if you take a look in United States, there's a bunch of stocks which every day moving from up 20% to down 20%. I want to show you some stocks which was up. Take a look. The stock was up almost 21%, and from 220 to 274. Take a look. This is the beautiful part. You can really anticipate this kind of move. You know, take a look. A lot of stocks really moved yesterday. CSLT. Take a look. Beautiful part about the stock. It went up. Very nice. Now we're gonna go with you to different platform. I'm gonna right now go with our platform with the Gerchik Company, and you can see moves on the different platform. This is a forex. Take a look. You know, for example, what we had at one point, we had yesterday almost 100 points move, and 105. I mean, let's go. Let's see. The low, it was 105 or 106, and the high 106.80. So we have 80 points. It's almost 0.8%, which is pretty large move at one point. Pretty large move, and it's a very decent ATR. Let's go with the British pound. British pound also, take a look. What do we have today? We'll see average move. Okay, high is a 125.1 and low is a 123, almost 125 points. You know, this is pretty large moves. It's almost 1%. So what I'm trying to show you, my friends, that you have to choose the instrument that you trade among how much money you have, what time you have, what are you planning to do with this instrument, what the stops, because you understand one thing. If your stops are pretty big, you're not going to be able to trade very small amount of money. So this particular scenarios, you have how much money you have, what time you have, what instruments you have, and what are your regular stops. It was a short webinar. It's not too much to say about the instruments. Try to choose the instruments among how much money, what time, and the regular stops, and then choose the instruments. And thank you very much. It's been Alexander Gerchik, and make money. Thank you.